Good afternoon from the UK and good morning if you're listening from somewhere in the Americas. Thanks for joining us again for this OAG monthly webinar. Today we're looking at survivors. What are airlines doing to be ready for recovery? I'm Becca Rowland, I'm a partner at Midas Aviation, and I'm going to be hosting today's webinar. It's now almost a year since we did the first one of these, discussing the impact of the COVID pandemic on aviation. I don't think any of us expected to be still talking about this a year on, but here we are. I've noticed that there's lots of reviews at the moment of COVID 1 year on, and in the media. It's tempting to dwell on what's happened over the past year, but we're going to be trying, as always, to look ahead and see what the data tells us about aviation over the coming months and weeks. Partly using OAG data, but also looking using our insight, analysis, industry knowledge, and all those good things. As I said, this week we're going to try and take a deeper look at airlines and what we can expect over the next few months. A conversation between our team a few weeks ago had us asking, why have we seen relatively few airline failures when we might have expected many more by now, given the fact that especially international air travel has been hit so hard. So we're going to be looking at that amongst other things. So we'll start by a little bit of a recap where we are at the moment, what we expect for Q2, then move on to look at some of the airline data we have, and ask about airline failures and look at some of the strategies that are helping airlines survive despite the difficult situation we're in. With me to discuss all of these things today is Andrew Lobbenberg, who's the head of European transport at HSBC. His background is steeped in aviation industry and he brings a real focus on the airlines. So welcome to joining us today, Andrew.
Thanks for having me.
Good to have you. And we've also got John Grant from OAG, who, as always, has lots to say about aviation, always provides excellent insight and analysis, and that comes with plenty of opinions. You haven't run out of things to say yet then, John?
Not at all, Becca. It's a pleasure to be with those kind words at this introduction.
It's always good to have you here, John. Okay, let's start with some of the OAG data that we've got. This is perhaps a little confusing because we've got slightly different things on the left and right here. I think as many of you who work with data will be grappling just as we are, do we now look at the performance versus last year, 2020, or 2019, given that different parts of the world were deep in the problems of the pandemic a year ago, and other parts were only just finding it making an impact. So on the left, we're looking at monthly data, how capacity is this month versus the same month the previous year, broken down by region. And on the right, we've got the last 8 weeks, but we've compared it there to the 2019 figure. So slightly different things we're looking at. John, what are the things that we should be looking at in this data here?
Well, it's fascinating, I think, Becca, because behind the data are just so many stories and insights, and just proves the value of data, of course. But as we're now 1 year into this event, the thing that always strikes me is that various markets are at different stages in the evolution of the pandemic and their second or indeed even third spikes. And this Sunday, looking at the data ahead of the webinar and the weekly blog, I was staggered by the levels of capacity growth that we're currently seeing in North America, particularly from the US airlines. If you look just back to the 22nd of February, they were at minus 45% of capacity compared to last same week in 2019, and now there's been millions of seats literally added in the last 3 weeks, and yet at the same time, lower South America and particularly Brazil, capacity is being decimated by the latest outbreak of COVID-19, and these factors are completely beyond the control of the airlines. Of course, they respond to them as they can. But I think one of the really interesting things is the impact and the different impact that vaccines are having in particular markets and countries. So much of the North American growth is based around the distribution of the vaccines, increased usage, and a real pent-up demand for people who want to travel domestically. And yet, ironically, in the United Kingdom, we have one of the highest percentage rates of vaccine at this moment in time, and we see no growth in demand whatsoever, primarily predicated on the basis that the rest of the UK source markets are way behind. And this is going to be a big issue as we move throughout the summer. Is not going to be capacity or demand. It is going to be at what rate other countries have taken the vaccine. So, the current situation in Europe with the suspension of the AstraZeneca vaccine is just a couple of days, hopefully, but it's a bit of a disruption to the whole recovery in the industry.
Yes, goodness. And of course, this data here, it shows traffic capacity originating by region, but we've got whole flows like transatlantic, which aren't quite captured in this, but basically they're virtually shut down now, aren't they? So very lucrative parts of the market still very much closed.
Yeah, absolutely. And I'm sure Andrew can enlighten us more, but for a carrier like British Airways, the transatlantic, and particularly the summer season, which normally starts first week of April through to the end of October, is extremely lucrative and profitable. And when they had the A380s and the 747s with their big business class configurations, they were licenses to print money on some routes in the next couple of months. Sadly, that's not going to happen this year either.
Well, thanks very much. Before we move on to the next slide, do ask questions. We will try and take questions as we go through as much as we can. If we have time at the end, we'll pick up some of those questions that we haven't answered until then at the end. But use the question feature on GoTo and we can see your questions as they come in. So looking forward, there's capacity, this is capacity in the schedule. The black line is what we saw in 2019 globally, so international and domestic. The grey line is last year. The yellow line is what we're seeing in the schedule at the moment, going to the end of Q2. But we keep saying this, don't we? There's just too much capacity in there. It's sort of a placeholder for the airlines, isn't it, at the moment? We won't see that level of capacity operated, we don't think.
No, I think it's very unlikely. I think, Andrew, without rubbing salt in the wound, there's more chance of Shrewsbury winning the FA Cup than there is of this capacity operated. It's really
very likely.
Both very likely.
Just a matter of time. Just a matter of time.
Matter of time, yes.
But certainly not by 2021. The great challenge, Becca, is that, as we just touched upon, there are many core markets and major capacity flows and demand that is just not there this summer and doesn't look like it will be. And that's extremely frustrating. But what we have been seeing, certainly through the last 4 or 5 months, is that airlines are retaining near enough their full schedules or what they would like to operate. And then between 6 and 8 weeks, beginning to pull back on their international capacity, and then at an even shorter time series of about 4 weeks or less, actually then adjusting their domestic capacity. And we saw some data yesterday from some colleagues of ours that nearly 60% of people in China, for instance, are only booking 4 days before travel. So, all of the historic patterns, revenue management tools that airlines had at their disposal have just got no value at the moment. And this is airlines, in as much as anything else, looking to generate some revenue by putting the capacity out there and hoping that with a very fair wind, the situation will improve. And they may be able to operate some of these.
So are you saying, John, that some of this is just liquidity, that you don't need to fly to have money coming in, you just need to be able to take in bookings? Is some of that this, or is it more wishful thinking that the vaccine and all the other factors in the market will enable them to operate these schedules with a good wind?
Combination of both, I think. I mean, Andrew, what's your thought? I think this is, you know, they'd love to operate this. They'd love the cash to go with it, but it is partly that optimism and dash for cash, I think. What do you think, Andrew?
I mean, I think the airlines fully recognise that the booking window is very, very tight, as you say. So, you know, they're extremely hungry for the liquidity that can come from bookings. But frankly, that's only going to come as and when you have the health protocols that are there to enable it, at least internationally. And indeed, you need the permissioning or the health arrangements to enable it domestically as well. So that, you know, you were referring earlier to the US airlines. We've seen a huge upswing in confidence among the US airlines, and they've been speaking to the financial markets this week, and they've been sounding very positive about increased bookings. But, you know, that's partly overlapped with the fact that New York has removed their quarantine requirements, for example, for travel from outside of state. So, you know, the flows of bookings are incredibly linked to the health rules. And, you know, as and when those health rules ease, yeah, you're right, the airlines want to be there to be in a position to harvest what cash there is to come in. And indeed, potentially to get ready to really go fly.
Absolutely. And I think Becca, there is an interesting lesson from last summer when BA were perhaps caught short in their planning, and when EasyJet and Ryanair were able to start flying, BA were probably about 5 or 6 weeks behind in terms of ramping up capacity. And no airline wants to get caught like that going forward. I think, you know, everyone would rather be there on the blocks ready to go rather than have a predictive date in the future and get caught with their pants down and an easing of restrictions earlier than they anticipated.
So, but as I note in the text here, when I looked at this data and I pulled it out earlier in the week, you know, there's a good chunk. By the end of June, there's about 22% of the capacity we're seeing there currently couldn't operate at all, really, because it's transatlantic or it's to from UK, Japan, China, New Zealand, places where there are, you know, there's really not a lot of international travel at all. So we need quite a lot to change in the marketplace, don't we, in terms of restrictions for this to happen?
We do, and you know, we're hearing IATA's travel passport is making progress, and they hope to have something available soon. I think in the last 2 hours, the European Union has said that they're going to have a travel passport for the summer. They didn't say what year, so they've given themselves a bit of latitude. So, you know,
I assume it's 2021.
Okay, so everyone knows what needs to be done, but everyone knew what they needed to do probably by July of last year. So getting it in place is the big challenge.
Yeah.
It's also worth remembering just with some of the long haul schedules that we've got out there in the market. I mean, at the moment, we've got some long haul flights, you know, operating in markets which are effectively closed. And yet, you know, the airlines are looking us in the eyes and promising us that they're only flying cash positive flights. So these flights are all fully, you know, the variable costs are fully met by the cargo revenues. And to the extent that you get 10 people on board or 20 people on board or 100 people on board, that's all ancillary revenue, as it were. So, you know, part of the funny schedules that we're seeing are related to, you know, cargo behavior.
Absolutely.
Yeah.
And we were hearing this morning that Singapore Airlines load factor, I think, was it for the first quarter this year, Becca, was 9 percentage points?
January was 9%, I think, yeah.
So, Andrew, you're right.
And yet I'm sure they're promising you that every flight that they operate is cash accretive at the margin. So, yeah. It is the world upside down where passengers are an ancillary revenue, isn't it?
It's a strange world. Strange world.
So we've got a couple of slides now where we look at what's happened over the course of the year, or since the beginning of last year, actually. And we've broken it up into Chinese airlines, US airlines, and then the next slide we'll look at a couple of others. Just we've picked out some of the top airlines as in 2019 capacity, to show how they've changed capacity through the year and what the expectation is for the rest of Q2. So that's the dotted line. I mean, I think the first thing that stands out is just how much variability there is month to month, which just shows what a tough job it's been for airlines to try and work out what to fly. But some very positive, numbers as we look forward to Q2. I think, John, you were saying the US airlines are very bullish about the market at the moment. Why has that come about at this point in the year? It feels almost a bit premature. We're only mid-March now.
I mean, it is that unknown of the pent-up demand that we've all been hearing about for some time, and we hope does materialize. It's also about, there is more capacity, and there is the opportunity for more capacity to come back into the US market with some of the 737 MAX operators, American and Southwest, for example, and they've really gone for it in certainly the first half of the year. You've got Southwest, who have entered the Miami market, which they've never been in before, and they've got, I think it was about 2,500 flights this summer scheduled from there, so that's about 12 a day. You've got Frontier going into Miami, you've got JetBlue going into Miami, there's new services to Fort Myers and to Sarasota, and Florida is going to sink under the weight of all the US tourists that are going to be taking domestic vacations in the next couple of months, and that's good for the airlines. And as Andrew was saying, the US airline CEOs seem particularly bullish at the moment about the future in the next couple of months. But domestic yields will be under pressure. Profitability will not be as good as it was with the international capacity that they offered and revenues they generated. So the margins are going to be tighter, and it's good to be cash positive. And every flight flown will be cash positive, but it's a long way to go towards a recovery.
To what extent is what we're seeing in the US partly the result of the support they've had from the government? Because they've had, the CARES Act and those sort of measures, they've had a lot of support, haven't they?
They have, and clearly very helpful. Allowed them to furlough people and skilled staff, and I know Delta report back 1,000 pilots, or are planning to bring back 1,000 pilots in the near term, and others are following. But some of that support's been available in other markets as well, Becca, either through direct intervention or loans or guarantees, whatever it happens to be. But Andrew will know better than most. It's not about what the loan is now, it's how on earth are they going to be able to pay the debt back at some time, or will they be able to pay the debt back? That's probably more of a concern for people at the moment.
Yeah, I mean, the short-term optimism in the US is just reflecting the scale of the domestic market and the pace of the vaccine developments in the US, which are quite favorable and are, giving rise to increased confidence there. And I was just thinking, looking on the left-hand side with the Chinese airlines, I mean, you can see the quite differential performance of Air China against Eastern and Southern, and obviously it's weaker because it's much more exposed to international. So, it's just the importance of a big piece of a big domestic market, because, those are opening up more straightforwardly.
We've had a question, a very reasonable question from somebody, John. Why are we looking at capacity here and not traffic? Why would it not make more sense to look at traffic? Do you want to just explain to listeners why we use capacity so much?
Well, when we're looking forward, forward booking data is particularly patchy on a global basis, and even more so at this moment in time. If we're looking at historic data is interesting, but it is history, and it's not going to help inform us in the future. We've looked at things such as search data to try and gauge sentiment about particular markets and particular destinations, and airlines are using very big data analytics involving just people searching for destinations, or even social media chat about particular destinations they would like to go to try and gauge demand. But at the moment in time, I think every airline is working with their hands tied behind their back, and are flying blind into what future demand will be. In some ways, the fact that the US market is constrained to only flying domestically, yes, you can go to Mexico and you can go to the Caribbean, actually makes it an easier market to manage from an airline perspective, because you know it is a constrained, locked-in market. I think that makes it much easier.
Thanks very much. Let's have a look at the same data, but for European airlines on the left, and then we've selected some other large airlines. Some of the ones that we would consider the biggest in 2019 are on the right. So on the right, we see Indigo's having a pretty good recovery. I guess, again, we've got a large domestic market there, haven't we, John? On the right, the Europeans also seem to be quite, they're putting a lot of capacity in for the second quarter. So looking quite positive, despite the fact that a lot of that will be international.
Yeah, and this is all about that thing about, you know, trying to generate cash and being ready for the moment when you can move. And we have seen some people coming back quite strongly, Turkish Airlines, but you know, they are one of the few European carriers who are able to benefit, as you say, from that domestic market. And I think that's absolutely vital. And they are so lucky to be in that position. But having said that, they've managed their way through it very well, and you know, they've come out the other side looking quite well placed. But a lot of this is going to come out. I think the fascinating thing is when the doors do open, and we do see an international recovery, how quickly the likes of Ryanair, Wizz and EasyJet and other low-cost carriers move to capitalize on the opportunity that they will have. You know, there'll be some very sharp fares in the market, I think.
And I think in our last webinar, we talked a bit about one of the Japanese carriers. Was it Spring Airlines that was saying they, was it Spring? They wanted to be ready to, you know, to move into a market or a new route within a week, which was, you know, it's going to be the agile carriers, isn't it, that can really take advantage.
Absolutely, but you know, there is that demand. I had a couple of discussions last week with Asian carriers on behalf of a client of OAG's, and they were saying they would be ready to move back into that leisure market within 3 weeks, and that, you know, that they would just open capacity and they knew the market would sell, because there are people who are desperate to get out. Now, you know, those airlines are based in Asian islands, and the communities have been locked down for a while. So it is quite fascinating. I've described it as a bit of a Mexican wave in terms of demand recovery. I expect, you know, every market that opens to see that sort of flood of Mexican wave type behavior before we get back to a more normal, stabilized demand profile.
Right. Our next slide here, we look at the top 25 airlines in terms of the capacity now, and just, it's really to show how dramatically that's changed. Now, obviously, some of that's to be expected. You know, we're seeing the top Chinese airlines and the top US airlines dominate that list of top 25 airlines because they've got those large domestic markets. To what extent do we think some of this will stick? Obviously, there's no European airlines in there. There's no Singapore Airlines, no Cathay. We know things will change, but it's been such a long time now. How are we going to see those sort of global rankings? You know, how are they going to be as we emerge from this?
Well, firstly, in terms of stickability, this has got as much chance of sticking as a snowball in the Sahara Desert. You know, this is going to last. And if I was Alaska or Frontier, I'd take a snapshot of this picture now and put it on the wall in the chairman's office, because the big point-to-point carriers, the low-cost airlines, not just in Europe but in Asia and in Latin America, are going to come back, and they're going to, you know, assume their positions in sort of 7th, 8th place and down into the sort of 15s and 20th positions, and many of these carriers will disappear. But more than anything, Becca, if you look on at the top, you know, if you look on these, what we're really seeing is the power of domestic networks and how they have made a difference for those airlines that have been able, and quite frankly privileged, to be able to have access to them over the last 12 months. And it's no surprise that you see these carriers here.
But the domestic markets the ones bringing in the yield, are they? They tend to be lower yielding, don't they?
Yeah.
Andrew.
I was going to say, I mean, I'm completely with John. I mean, I thought he was going to make some snide remark about Shrewsbury winning the FA Cup again, because these rankings are clearly, not here for good. But I think it's fair to say there will be some enduring changes to the rankings, and I suspect we'll come on to talk about it. But, the relative position in the rankings globally of the likes of a Ryanair, of the likes of a Wizz, or indeed of an Indigo, those are going to be higher. And the relative positions of someone like Lufthansa or indeed Air France KLM, those are likely to be smaller when we come out, and that will probably endure. Not night and day different, but relatively speaking, these point-to-point carriers are going to be higher, and some of the big networkers are going to be a bit lower.
And it is, Andrew, you're absolutely, it will be fascinating. I mean, every week when I pull the data, and you sort it out by the largest to the smallest, and you see carriers like Cathay Pacific and Singapore Airlines, and until recently Qantas, languishing right down the bottom of that list. You just would never have expected anything like this to have happened before. And equally, carriers, with the greatest of respect to Alaska, Spirit and JetBlue, ranking where they are is just it's just staggering. But there will be a reset, and it's inevitable that the point-to-point and the low cost are going to move up and the others are going to move down.
And of course, a ranking of size isn't profitability, is it? It's not how well it's doing as a business. It's just one measure. Absolutely not.
And as someone who's only 5'6", I've learned that throughout my career, that it's not your size that is important. And I think that's that's a very important thing as we come through this. It's not about capacity, it's about profitability, and it's about cash generation. That's much more important than blowing your brains out with too much capacity too quickly.
Well, on that note, we're going to stick with capacity. This is a slide showing some capacity in the US. I've headed this mixed messages. I know you're very positive, John, about the US at the moment, and you're seeing a lot more capacity this week than last week or the week before. But actually, the schedule shows that the carriers have taken a fair bit of capacity out. Though come the end of June, they're still, at the moment, it's looking like it'll be better than 2019. So some interesting things going on here, isn't there?
Well, mixed messages, but also, that reflects reduction or just the taking out of international capacity, because it's just not going to happen. And the US is a very large domestic market, but it's also a very large international market, not just transatlantic, into the Caribbean, Latin America, Central America, and even US carriers have a reasonable smattering of capacity to Asia. So you have to look behind. The devil is, as always, in the detail. You have to look behind the aggregate numbers as to where the churn is occurring. I guess for every seat that comes out that's an international seat, it probably pains them twice as much as taking out a domestic seat at the moment.
Yeah. So we've got a similar slide for Latin America. This is South American capacity in the chart, so not looking anywhere near as positive. Brazil's really struggling, isn't it, John? It's the second wave or third wave. I'm not sure how many waves they've had now of COVID in Brazil, but it's not a good situation.
Not at all. 19% reduction in capacity last week compared to the previous week, with all three major carriers, so LATAM, Azul and GOL, all reducing capacity quite significantly, and it ripples out, Becca. It's not just about Brazil; it's the impact it has on surrounding markets as well. It's a struggle for them to make headway. We've obviously had LATAM going through a Chapter 11 process. We have Avianca who's going through a Chapter 11 process. It's a tough market in Latin America generally at this moment in time. We've seen Colombia perform quite well. And a lot of that is around they have a domestic market, a sizable domestic market, and they have low-cost carriers. And you know, it's no coincidence that whenever we talk about these sort of things, those that have done best are domestics, low cost, point to points, and complex carriers with, you know, networks and connecting flows. That's where the biggest damage continues.
John, I mean, clearly the sort of the marginal trend is unfavorable in Brazil, but it's also worth noting that, you know, if you look at where they are at the moment in absolute terms, you know, we'd be dreaming if we were at that level in Europe at the moment. So, you know, their current position is actually much stronger flying than what we've got here in Europe, to be fair.
Yeah, you're absolutely right, and you're right to point that out, Andrew. It's I guess it's just a frustration of when you suddenly see that 19% being cut, but equally we probably did that a couple of months ago.
Very interesting. Let's move on and look at Europe rather than look at the whole of Europe. Having had a pre-webinar chat with Andrew, we've got a slide that really just looks at Ryanair here. You had some really interesting thoughts, Andrew, I thought, on Ryanair about how they may come out of this really with having turned some of their weaknesses into strengths.
Yeah, okay, thanks. So, I mean, the question you posed to me is who's you know, coming through the pandemic most successfully, and certainly my viewpoint is that it's standout favourable for Ryanair. Now, clearly, you know, in terms of market share and traffic growth, you'll see Wizz there, and you know, EasyJet and Jet2 are going to be quite strong as well. But actually, in terms of profitability and strategic position, Ryanair's in an amazing place. Prior to the pandemic, yes, they were a powerful business, but they did have two very major challenges, one relating to fleet and one relating to labour. On the labour side, in December 2017, they'd been unionised, and since then they'd been facing upward pressure in terms of labour costs and reduced flexibility from their new experience of working with unions. On the fleet side, they ordered the Maxes rather late when there was a large order backlog, so the prices obviously weren't too bad because they bought a lot of them, but I don't think they were stellar. And then suddenly, you know, they couldn't get the aircraft because of the MAX groundings. And they were also struggling to engage with Airbus to get them to offer them a product because they weren't taken seriously because they're regarded as a Boeing-only buyer. So they were a captive to Boeing. And if they wanted to flex and buy the bigger MAX, which I think was of interest, they were having to pay up. They were in a bad place on planes and on labour. Now, after the pandemic, you know, they've made very quick, simple, straightforward union negotiations to lower their labour costs. And their relations with unions have actually been among the most straightforward of the European airlines, and indeed potentially the airlines globally. So it really is an absolute reversal of the situation that we had before. They've got their labour costs down, they've got better relations with unions, and as they go forward and as they grow, as the Maxes do come in for delivery, they'll be able to take advantage of a huge pool of airline labour. And with regard to Boeing, obviously they've gone and placed a big follow-on order for the 737 MAX, but also as part of that order, they have redefined the pricing for their existing order, which is obviously super important, you know, because it's going to set out the cost of their aeroplanes for the next 10 years. And, you know, that's an incredibly important driver of their profitability. So, you know, seen through my little head, you know, Ryanair are in a standout strong position. All that before you speak of the opportunity of the gaps in the market from other airlines shrinking and potential opportunities to negotiate with airports, which are obviously there as well, albeit that they're available to other players too.
I think that's fascinating, Andrew. And obviously you're looking at it perhaps more from a profitability and business angle. I would often look at the airlines from a sort of where the market demand is. And, you know, from that perspective, right, you know, we expect business travel to be weaker, leisure travel to be stronger, and of course, again, they're positioned really well, aren't they? They are, you know, the ultimate.
Yeah, absolutely. I mean, they're short haul, they're leisure, And to the extent that we have domestic markets in Europe, which is nothing like, the case, the scale of America, India, Brazil, or China, but still, the domestic markets in Italy, the domestic markets in Spain, they're certainly playing in those markets.
Andrew, we've got 400 delegates attendees who are running away to invest in Ryanair at this moment. On the counter side of that, without going into too much detail and embarrassing a carrier, who do you think is perhaps at the other end of the spectrum and slightly exposed by the recovery and where they'll come out? Is it the legacies? Is it the Lufthansas and the KLMs and Air Frances?
Yeah, no, I mean, that's obviously the case, that the carriers that have had a tough pandemic are Lufthansa and Air France, KLM. And, the carrier that has been most surprising, I think, is Lufthansa, if I'm honest, because as we came into the pandemic, it was our view, and I'd like to think it was everyone's view. It was entirely consensual that Lufthansa was a financially strong business. It didn't have that much debt. It owned almost all of its own aeroplanes. Most of them had no debt against them. It was a financially really solid business. And as you came into the pandemic, they didn't have very much cash, but hey, who needs that? They own all these planes. They weren't worth the beer tins you could make them into. And Lufthansa was, one of the first carriers to run screaming to the government, needing state aid and needing an awful lot of it. So yeah, they've had a very, very tough pandemic. They've taken on a lot of debt. They've taken on a lot of government influence, and obviously their market positioning is difficult because they're in long-haul markets, they're in business travel markets, they're in connecting flow markets. In time, all that will come back, but that will take time. So, Lufthansa are definitely the surprise, because we all thought that they were financially really strong, and that strength, evaporated.
I think they were burning 20. Are they burning $20 million a day now, or at one point they were burning $20 million a day? Staggering.
Yeah, no, that was the number from last year. They were getting to cash very quickly. Yeah. But I mean, the thing is that all their financial strength was tied up in aircraft, and suddenly you can't turn that into real cash. So they're in a mess. They're in the wrong place.
Yeah.
Interesting. So when it comes to the business side of airlines and burning through cash and so on, we've added a slide here about the jet fuel price, because we're thinking that this is going to be coming up the agenda over the next little while. We've seen the jet fuel price come up 75% over the last 4 months. Admittedly, it's only taking it to the sort of level it was at for a good chunk of 2017, 2018, 2019. But the airlines don't need this major cost item increasing, do they, at a time when they're trying to recover and just keep the lid on those costs that we've just been talking about.
It makes it harder to. Go on, Andrew. After you.
Go ahead.
I was going to say, it makes it hard when you're trying to be cash generative, and suddenly the biggest cost you can't control is flying north at a rapid rate. Not good news for the airlines, Andrew.
So yeah, at least optically it doesn't look good. There's been an awful lot of complications around the fuel price through COVID, and that is principally because most airlines hedge fuel, and certainly in Europe we do more hedging than most places in the world. Typically European carriers hedge 70 to 80% of the next 12 months and 40 to 60% of the following 12 months of fuel, and suddenly we weren't flying, so they had all these unused fuel hedges. And as the fuel price dropped, that meant that they had to pay back the out of the money bet for that fuel hedging. So suddenly it was a horrible pain on top of it. But that is the real irony, which is where we have fuel hedging, a rising fuel cost, a rising fuel price it's favorable to the airlines. because actually they've got more fuel hedging than they're actually flying. So the price of the fuel they're burning is already defined by that fuel hedge. And they've got a block of fuel that they've hedged that they're not using, that they're having to pay back to the financial institution they've made that hedging deal with. If the fuel price goes up, the cash out from your fuel hedging structure disappears. So we are, at least for this year, probably not crying about this. It's actually potentially even favorable to the airlines, because you're out of the money inefficient fuel hedges is going away and might even become a winning bet and contribute some cash to you. It's really quirky, I grant you, and it's only for this year. But actually, there's less to be scared about. Sorry, Becca.
It'll only apply to those airlines that have got those hedges in place, though, won't it, as well?
That's absolutely true, and that is very much more a European thing. The US airlines and the Asian airlines hedge less, and people like American and Emirates don't hedge at all. And obviously, as you roll forward to next year, there will be less hedging in place. As we've gone into the pandemic, people have certainly stamped on the brakes on hedging. Heavens above, it's got them in a right pickle. So yeah, they are facing higher fuel bills conceptually for next year. The only way to recover that is through yields, and then whether you can do that, that will depend on where supply and demand balances out in the market, right? Just the other thing to hold in your head as well, we're looking at a Brent crude dollar price here. Obviously, FX, foreign exchange rates can change. Sterling has gone up a lot against the dollar. So if you're an EasyJet, say, your sterling price is not so badly hurt. And also be aware that, the spread between kerosene and crude is also come down.
All of which...
We'll have to hold our heads there, I think, Andrew.
Yeah, all of which just goes to show how complex it is for an airline. It's not just about the revenue management and the commercial side. You've got an expert in futures trying to read the market and read it effectively. And I think there's many examples, Cathay, Singapore Airlines, who've read the tea leaves pretty badly in the last couple of years, and had some horrendous results as part of that. But it's just, you just cannot guarantee what's going to happen, can you? You make a bet and you might as well go to Cheltenham this week. No one else is there.
So when we
it was more fun last year. You could catch a disease, yeah.
So at the beginning of the webinar, I said that one of the things we wanted to talk about was why have there been so few airline failures in this past year? I haven't got an exact list of the numbers, but it doesn't seem that it's perhaps any more than we might have in a regular year. And the most high-profile failures are carriers like Knox Scoot and Level Europe. They're not exactly the sort of the big airlines. So we've got a few sort of thoughts here on the slide about why that's the case. We've obviously had a lot of government support. Bankruptcy protections actually enable, traditionally in the industry, we've seen a lot of airlines emerge from bankruptcy. We're seeing a little bit of M&A activity, but that's typically in domestic markets. John, Andrew, what are your thoughts on why we've seen so few failures, or will we see some further down the line?
Andrew, would you like to lead?
So, I mean, the first thing is a surprising willingness of governments to bankroll airlines. Prior to the pandemic, airlines were filthy, dirty, polluting businesses that took advantage of consumers and were not top of the pops with politicians or the media anywhere. Suddenly, into the pandemic, we saw politicians, sometimes a bit reluctantly, but in the end, pretty promptly reaching for their checkbooks big time in Europe, in the US, across Asia, writing really big support checks to airlines. The exception, quite broadly speaking, is Latin America, and that's why we've seen many more filings for bankruptcy protection in Latin America, Avianca, LATAM, and Aeromexico, and less so in Africa as well, which is why we've got the problems with South Africa and Namibia at Air Mauritius and places like that. So huge willingness of governments to write checks. Thereafter, we have found that, the debt markets have been available to airlines, and they become more available when it's obvious that the government is standing behind them. And otherwise, airlines have started to try and monetize, to try and raise debt against things that perhaps you wouldn't have thought was likely before, most obviously being frequent flyer schemes or slots and stuff like that. So airlines have worked, 13 to the dozen to raise liquidity and have been quite successful. Governments have written lots of checks, and otherwise, airlines were really aggressive about, holding on to the cash that they had, managing their working capital. If they were sat there in spring of last year and they were sent a bill for flying in previous months, they just didn't damn well pay it. Consumers wanted refunds. Regulators told them to pay refunds. They just didn't pay refunds, right? Or they found ways to cook around it. So they clung onto the cash. And, looking at their balance sheets, at the end of December compared to where they were at the start of the pandemic, it is quite remarkable how effective the airlines have been at clinging on to what cash they did have. So I think those are the three big factors: working capital, raising liquidity, and the contribution of governments. And that's what stopped more, that's what's meant we've had so few carriers fall over so far.
I think another important thing is just the physical element, isn't it? Because previously lessors could perhaps already have a list of customers that were on standby for additional aircraft and wanted them quickly, and there was nowhere to place these aircraft. So better renegotiate and hold on to a customer and just accept the pain of a refinance deal than taking the aircraft and parking it in a car park alongside a 737 MAX. So it's staggering. But yeah, Andrew, I wonder, do you think as we come out of this, we might see a bit more of a fatalistic market, or do you think those that have survived will continue?
Oh, no, the former. I mean, I think as we come out and start to go flying, yeah, you'll go out and we'll see who's wearing trousers, as it were. Airlines will need to raise fresh capital to rebuild their balance sheets at that time, because even though everyone's survived, the people who've survived have done it with just layering on pile of debt. So everyone is going to be trying to restructure their balance sheets and raise fresh capital as we come out. And it's at that time that we'll see, good companies will get capital and bad companies won't. And, that will see a tidying up of the industry, shall we say.
And in that context, it's quite fascinating, isn't it, that one of the perhaps biggest casualties that we've forgotten to put on here or missed out is Norwegian. And there clearly there's a board meeting tomorrow, and there's a vote on the refinancing, or another vote on the refinancing. But at the same time, to that point about aircraft and no one else wanted them, here's a business and an operation that grounded its 787s, returned them, and then their former CEOs now pick them up to start Norse Air. It's a mad world we live in sometimes.
It's a remarkable world, and I mean it's not just on the long haul side, is it? Because we've got Norse Atlantic, which is aiming to replicate Norwegian's transatlantic long haul business, and then we've got Flyer, which is up and running. They've raised capital, aiming to replace their flying in Norway. But these are new startup airlines with no legacy debt. If Norwegian can emerge from bankruptcy as it proposes, even on its current business plan, it's going to have $20 million of debt per aircraft, which is about the value of each plane, isn't it? And it's going to be competing against these airlines with no debt per aircraft. Yeah.
We're going to need a ranking of airlines by debt, I think, as we go forward.
Totally.
So in terms of the other things that airlines are doing to stay in the game, you've said that maintaining liquidity is top of the list. We've listed a few other things here, some sort of bigger, some more strategic, and some smaller. You know, we're seeing things like KLM starting a tour operator, trying to just pivot the business a little bit more towards leisure. We've seen some restructurings. We know that Malaysia Airlines, I think, has completed their structuring now. We've seen a lot of government support. The furlough schemes have provided an awful lot of support to airlines as well. We're seeing cost reductions, renegotiating contracts with Start. We're seeing startups. Lion Air is an interesting startup airline, isn't it, John? Or they've got a startup. Are you able to say a bit more about that?
Well, yeah, I mean, I think it has one of the largest orders for Boeing 737s, the Lion Air Group. But I think this is about how they're going to finance and how they're going to restructure for those new aircraft. And all of these are examples of immense creativity. And Andrew was speaking to that slightly earlier, you know, how people have sold their frequent flyer programs and all sorts of things to raise cash. And, you know, one airline got to the point where it started selling its first class catering equipment that it used on its A380 and Boeing 747 fleets. You know, and you had the world's most favourite cutlery on your dining room table. So it's incredible the lengths that airline have gone to and the creativity.
I think one of the ones I find most interesting as somebody who's interested in the sort of air service development side of things and airlines starting new routes is this. We've heard a few instances of competitive tendering for new routes. So out the window goes all the strategy of understanding, you know, where a new aircraft's coming into the fleet and where it's going to be deployed. Instead, the airlines are just saying to potential destinations, make a bid for the route as we start it.
Absolutely. But, you know, for any airport or tourism DMO type company listening, the world will be very different as we go through this recovery, because these airlines are going to be looking for increased levels of support. They're going to be looking for some real investment into the route and perhaps even risk sharing, because, you know, the airlines know how important and how much value they create in terms of economic activity and economic wealth, and all of those things that Andrew described airlines as, you know, as being dirty and unwanted, but governments had to come to their rescue, is because they are economic catalysts. And if a Caribbean island or, you know, a second tier airport wants air service and wants to rebuild it quicker than its competitors, then there are going to be airlines who are willing to work with them, but it's going to come at a price, and that perhaps is the new world order.
Okay, that's great, John. We've just got one more slide, and then I think we're going to have time for a few questions. One of the things we have touched on, particularly at the beginning of the webinar, was the role that vaccination rollout will play. And we've just played with some numbers here. This isn't science, it's just looking at a bit of numbers. But we had a look at what would happen if the rollout of vaccination through the first part of the year continued at the same pace. So to the end of January, we have that sort of level of population in each country vaccinated. At the same pace, that's where we get to in March, and then May, and then early August. So obviously the UK is heading for 100% by the summer. The US perhaps a bit over 50%, but these other markets, Spain, Portugal, Greece, Germany, key places in Europe, we're not looking at levels of vaccination that are going to make a massive difference, are we, to air travel, or will it not be about vaccination levels?
Well, it depends on the risk of each of these governments and their need for pound sterlings or dollars or euros as to whether they, you know, are prepared to accept inbound travellers with those levels of vaccination from a first jab. When you look at this, it's stark, and I think it just highlights how difficult the recovery is from an international perspective. And also, whilst we sit in the UK and we all glow about being jabbed and having a cold the next day for 24 hours, that unless these other countries pick up the rate and vaccinate, then many of the markets will remain closed or will at the very best have some restrictions applied to them. And we've not really been factoring this into our thinking, and we've now got to start to. I mean, at the moment, Becca, it looks like if you're in the United Kingdom, you know, the only place you can go or would be perhaps available would be the United States, from a vaccination perspective, which is just as
we'll
well.
Be heading to Florida as well.
Absolutely, will help Florida sink, you know, and fortunately the dollar has weakened against sterling, but it's another part of the whole thinking that we have to put into this challenging situation.
Yeah. It'd be great to take a couple of questions now. We've had one from Maria, which sort of touches on some of the sort of environmental noise pollution standards. So in the government support, are we seeing any more sort of reconciliation of the need to make the industry greener at the same time as supporting the airlines? So how do those two play, the whole sustainability agenda with our recovery? It's a nice question for you, John.
It is, and you know, we've seen a couple of examples with Air France being given some restrictions around their financing and reducing domestic flying and making greater use of train services. We've seen the Austrian government threaten to impose a minimum fare level, I think, of 40 euros to stop the dumping of cheap fares and the impact that has on the environment in Vienna. Some may say it's also a protectionist step against Austrian Airlines against Ryanair. Surely not. Governments don't behave like that, do they? So you know, it's there is some linkage. I think it's refreshing and reassuring to see that as we begin to come out of COVID-19 and the pandemic, we are now beginning to see airlines picking up again on their environmental obligations. And talking about sustainable fuels and other such things. So you know, it was rightly perhaps put a little bit back on the agenda during what's happened in the last 12 months. But airlines are pretty much aware of their obligations to the environment and look like they're picking them back up, which I think is good.
I guess while you've got to keep a real close eye on costs and you're going to operate fewer aircraft, it's going to be those newer, more fuel efficient aircraft that are the ones that are used as well. So we will see a bit of a shift in terms of total fleet composition towards some of the newer aircraft, won't we?
We're seeing it already. You know, the 747s are nearly gone. The 340s at Lufthansa have been operating, look like they're finally going to go. The gas guzzlers are going. The 737 MAX is coming back, which is, you know, intended to be much more fuel efficient. 787s and 350s seem to be the long haul aircraft of choice. Yeah, it's all pointing in the right direction, and this may have moved us perhaps a couple of years forward in that objective than would otherwise have been the case, which is good news.
We've got another question, slightly different topic, but the mix of business and leisure travel. How do we think that's going? Where will that end up at the end of all of this? We've contemplated a fair bit about whether all of the business travel can or will return, but where might we end up with that, and what does that do for the business of an airline in terms of the sort of different yields that those have?
Yeah, and Andrew, over to you.
All right. I mean, I think, you know, it's very straightforward that leisure traffic will come back faster than business, albeit that, you know, in America, in the context of their domestic market, they are seeing business travel return. And certainly it seems likely that self-employed people or SMEs are going to get back to travel, you know, faster than big corporations. But, you know, looking beyond the pandemic, yeah, you know, the share of business travel will be smaller. But I mean, if you look at the 5 years or indeed 10 years prior to the pandemic, through that period, it was incredibly clear that leisure traffic was growing much, much faster than business traffic anyway. So we were actually on a gradual erosion of the percentage of business traffic as the total of overall traffic anyway. And the other thing I'd throw in is that another reason why we were on that path is that major corporations, were starting to face pressure from their investors and from broader stakeholders to reduce their carbon footprint, and a large part of that comes from business travel. So I think, even before the pandemic, we were on a gradual trend down of business as a share of total travel, and that was likely to somewhat accelerate anyway because of the intensifying focus on environmental matters. So, as we come out of the pandemic, we'll get, Zoom has changed everything. And I don't think that's the case. I think we're on a gradual decline of business travel anyway.
Very interesting thoughts there. Thanks very much, Andrew. It's now 4 o'clock in the UK, so I think we'll call that discussion to an end. Thank you very much if you've been listening in. It's great to have so many people returning every month and listening to these webinars. Thank you both, John and Andrew, for your insights today. Just really great listening to you talking about these points. Thank you.
Pleasure. Thank you, Andrew.
We'll be
back
on April the 14th for the next webinar. So if you're on the mailing list for OAG, you will be receiving emails about that. So do sign up, and we look forward to another webinar then. Thanks very much. Bye then.
Thanks. Bye-bye.